investors versus influencers. Who's shaping the game?
Right. Let me see full stack. Anton, Mr. Key, Malak. Everybody has really good names here. Okay, guys, thank you so much for your patience. And I was talking in the previous keynote about VCs against KOL, so this is going to be an interesting panel. I want to hear your opinions. So maybe we start with ladies first. Maybe you can introduce yourself to everyone and tell what do you do.
Sure. Hi, everyone. My name is Malak. I'm a chapter director at VNTR, so it's venture, but without the vowels. We are an angel syndicate and investment club based globally. We have 30 chapters and 4,000 accredited investors. We organize these investor-only events to get investors to either share deal flows or to even co-invest in a venture fund. And previously, I was living in Italy, but I escaped Italy for the taxes, and I'm here in Dubai.
Thank you, Malak. Anton.
So I've been in the crypto industry for more than 10 years. My background is crypto exchanges, market-making companies. I'm a venture partner at Full Stack VC. It's an early-stage venture capital fund based in US, and I'm also a chief investment officer at Freedex, which is a soon-to-be-launched crypto exchange in UAE.
Mr. Key.
Hello guys, I've been in the Web3 space since 2013 for about 11 years right now, and I'm focused on running our fund, Key Difference Capital, along with our accelerator in Dubai, which is bringing a lot of Web2 companies to Web3 and focusing on fundamentally strong companies that can shift the perspective of the crypto space.
So Malak, Mr. Key, and Anton, we have a powerhouse here. You are proper crypto OGs. You've been long time in the space. But I want to start with Anton. Who do you think holds more power in crypto? Investors funding projects or influencers driving narratives?
So as an investor, obviously I'm biased here when I try to answer this question. But I mean, so if you ask me, are investors more powerful community? And if you're talking about any other industry than crypto, I would actually say it's probably the investors, right? Okay. So if you're an AI company, a fintech, a B2B SaaS company, I think really investors rule the game, because actually the way your distribution channels in many cases depend on how much money you have, how much money can you spend, and how can you access this distribution channel and then get your clients or so on. Now the crypto world is very specific, and since all of us are kind of OGs, we know kind of the community rules the game actually in crypto industry. And all of us have seen success stories where you have like organic projects who maybe raised a little bit of funding in the early days, really scaled as their community growth. I actually give an example in this market cycle. It's Hyperliquid is a very good example of that, who kind of became top crypto exchange, a DeFi exchange. And I just know they did a bit of funding early in the days in 2022. And rest, it was just scaled with the community. But I can just, because I was a founder as well, I can tell you that if you internally as a team don't have the capability to build a community, don't have the capability to build the distribution channels that change a lot as time passes, I think really still money rules the game. You can just buy distribution, you can buy ads, you can buy conferences and so on, and you can reach the right people. So I think very much depends on the use case, but money rules the game.
Money wins. Money talks.
Money rules the game.
Mr. Kijo, obviously very influential. And what do you think influencers shape market sentiment more than actual investment capital?
I think this really depends on when you're asking this question. If you ask the same question in a bear market, it's money that rules, investors, because it doesn't matter what you do. You don't have money and someone can hype you all up and everybody in the space can be great, excited about your idea, but you're not moving ahead. You need money to build your product. You need money to set the foundation, the basics of your team. So in a bear market, I believe it is investors' market and they rule the game. But when the market is bullish, there's a lot of money in the market. Investors are literally trying to get allocations and projects are going crazy. Hopefully, we might and might not. I don't know if we might even see that kind of a time in this particular cycle. But if we do, that is a time when the influencers and key opinion leaders would have a lot of strength, because at that point, money is surplus. Literally everybody that we might be looking around us, there will be an angel investor, and there'll be a lot of new VC shops setting up. So money is in surplus, but you need strong distribution. And not only distribution in the crypto space, as even the last panel covered, it is also about what happens with the attention. It's an attention-driven economy, whether for your product or your token. A lot of companies in the crypto space need attention to their token because they don't have a product yet. But I think this cycle we see a lot more product-driven companies coming up because there's not been a lot of money in the space for a few years right now. So with this being the case, you still need more influence and influencers to drive both the product users to drive your traction and your token itself, which might only happen partially by your product's demand, but the rest by the market sentiment as well. So I think it's a bull and bear market question. In the bull market, it is really the influencers, and the bear market, investors.
And talking about investors and community, Malak, I know you are the chapter director of Venture. You know, I have a couple of friends there. It's a big community, by the way. But I have seen, as an investors, they can use their influence to pump their portfolio. I have seen in Venture, there is a couple of friends of mine that are influential as well. They're investors, they're KOL, so they work for exchanges. But they can also influence and talk to more other people, let's say in Venture or in Venture partner, hey, let's all of us go and inject capital to this company. What do you think? Do the people in, for example, in Venture use their influence to pump portfolios in a nice way, of course?
Yeah, that's a good question. So, well, in Venture, we have a lot of these accredited institutional investors. So even like corporate VCs, like PwC, or even banks that also have like an investment arm and invest into crypto. So oftentimes they're a bit skeptical when it comes to like OTC deals. Now, like the market has been so matured in the sense that, you know, after Summer DeFi, we now kind of understand more about tokenomics in the sense that, you know, there's vesting period. You know, some VCs are very reluctant if they are gonna just like have the team are gonna drop the token, you know, within 1 year. So now it's been becoming more mature, and at Venture especially, we have a lot of these Web2 investors investing into AI and slowly into Web3, but at the moment with OTC deals, it's becoming a lot challenging. So you need to have like a really good trading volume, and a lot of like your total supply should also make a lot of sense.
And I have an open question for all of you. You can answer in any order. So I've seen influencers or KOLs becoming their own VCs, right? Do you think that's fair? But also I have seen founders of VCs to become influencers so they can go on a stage. What do you think, guys? Is it fair or unfair?
Yeah, so founders becoming influencers or kind of building their own media empire as they grow, I think this is a brilliant idea. And I'll give an example, like maybe our biggest inspiration in the industry, CZ. He's a media superstar actually, right? So, and imagine the power he has in enhancing the business, acquiring key partners, getting the right people on board, getting the end users through his Twitter channel or X channel, right? So it's really, really, really powerful. Now, on the other side, I think that one point that you kind of touched upon, that it's very important to understand that today crypto industry operates as an ecosystem. And you mentioned the word volume, but I would also want to add is that the KOL or hiring KOLs is not enough unless you have the investors on board, the exchanges on board, and the market makers on board. Because anybody who has spent a bit of time in the crypto industry will tell you it's all about liquidity. Is liquidity coming in? Do we have enough liquidity for the tokens? So I think many times people are looking at the KOLs, but they should be looking at the rest of the ecosystem. Do I have the right market maker on board? Am I listed on the right exchange? How can I be listed on the right exchange? Will the OTC deal that I'm pitching to investors, will it kill my token, or will it support me actually to go through a specific time period where I need funding? So I think this is a very unique aspect of the crypto industry, is that we're an ecosystem. Nobody lives by itself, actually, and that's the only way to succeed, in my view.
I think that's a good point there, but the crypto ecosystem is also a place where people wear multiple hats. And everybody is, at least, I mean, anybody that you go around talk to, they are doing 3-4 different things at the same time. So that's the nature, because the space was small, the opportunity was plentiful, and people had the ability to do more. You don't see that in the Web2, you don't see that in the mature space. So VCs, being an influencer, allows them to attract deals and also influence the narrative and even pitch new narratives out there that they believe in, that they see as a vision. But what you really see as a problem here is when key opinion leaders are becoming investors. years. That, I believe, is one of the reasons why the industry is suffering the way it is right now, because number one, they are earning money and they're reinvesting that money into projects. There's no due diligence done. The crypto VC ecosystem is very immature compared to a traditional venture capital model. You have a board, you have a committee, you discuss, you have a model of analyzing a project, submitting a report, everybody coming in consensus, doing the right diligence, and then getting on a deal. You don't have that in the crypto space. It's about a meeting. By end of the meeting, what is allocation? What can you give? What, can we sign the SAFT? Nobody reads that SAFT, and then they sign it. That's how the space has been going. And with key opinion leaders, it goes to one level deeper, but there's nothing, no paperwork. It's really, you know, hey, this is a deal. Okay, here you go. Here's the money. That's it. It's done. And because they have the power, their influence is the power. It is the contract. You cannot screw them. But the problem that this drives is that the incentives are misaligned. So now the one who has the loudest voice is the one who has done the least due diligence in the market. So the person that is most probably speaking about the project that millions of people are listening to and hearing, they have done the least of the study on what is the viability of the project or the business or the token in the first place. So now this mixed alignment in the space causes trouble, because now the retails and others are looking at these guys, and VCs don't publish a lot of reports. VCs publish seasonal reports and maybe about one or two important projects they talk about it. They don't talk about few hundreds and hundreds of projects that are in their portfolio. So now the real message comes from the one without due diligence, and now investors and the retail go in there and then they get into the bloodbath, and it's not good for them. So we are in the stage in the crypto market right now where other than Bitcoin, everything else is so bad, is because there's no trust and there's no foundation, focus on the foundation, and there's a dilution in the space. And I think this problem that you brought about is not a good thing for the industry. Of course, you cannot stop it. You cannot avoid it. It is the nature of the space. Like he rightly mentioned, if a founder is an influential person, it's a good thing. They can move their business ahead. And K-Worlds being in VC is good for them, but is it good for the industry? It's a subjective opinion.
And what about Malak? What about all the people in venture? Do you think they become influencers as well?
I'd like to add a question on your question.
Okay.
So basically, like we've seen with Binance, they're kind of doing this whole buyback technique where they actually, like with the BNB token, they do this quarterly where they repurchase, and they also burn the token supply of this BNB token. And why they do this? Obviously because they want to create this kind of sense of excitement. It's an actual event that happens quarterly, and also it kind of pumps up the token artificially. In that sense, it kind of works if let's say the parent company acts like a KOL, and in this way, it's more like an event where the community gets excited, and this way, even the community members of Binance, they participate in this event. It's kind of like the similar way we had with the Bitcoin event as well. But to kind of mention about the power dynamics with investors versus KOLs, back to your question, Andres, is that, okay, so KOLs, like also Anton has mentioned, it wouldn't really work if it's B2B project. Obviously, if you're tapping into retail, then obviously like your token, even if it's going to go up, it's probably going to go and everyone is going to dump it. So it really depends on the relevancy here, if we're talking B2C or B2B. But if it's B2B to C, then it might make sense. But yeah, I mean, I'm a bit skeptical when it comes to KOLs in that sense. I really like the idea of KOLs in terms of influencer marketing. I'm not very much bullish on KOL rounds.
That's a good topic. Talking about KOLs, I just going to read something by my good friend Iqbal, because the market is suffering a lot today, right? He's saying the same KOLs screaming all season are now bearish. The same retail are now selling for 80% loss. So don't sell now. Retail plus KOL bearish, best me for institution to buy. This is a bear trap. So we have seen, you know, JP Morgan, everybody talking, don't buy Bitcoin, and then buy Bitcoin. So these guys are also doing kind of pump and dump. So, but because they have more tools, obviously more influence, more access to information, and they can make more money, then the retails, even the KOLs that are trying to fight against this big institution, also suffer. What do you think, guys, about the big guys also driving the market up and down and making billions out of it?
So I'm glad you mentioned the traditional finance in JP Morgan, because, as an example, not mentioning them specifically, but Actually, all of the things that we are doing in the crypto industry, if you come from traditional finance, you know that happens in traditional finance as well. So when a company needs to go public, you have something called a roadshow. There's just a fancy way of saying is you go to a bunch of investors and you pitch them to buy the shares of your company at the IPO or post-IPO, right? And that they deploy capital into shares of your capital over a long time period. So all of these things absolutely make sense. Now, where I would want to say is where crypto industry is very unique and innovative is something that came out of the frustration from the retail from all of these token launches. So what was happening? The investors get the valuation this low, and then the token is listed at valuation this high, and then the retail has to buy this high. And this is your famous now low float, high fully diluted valuation, and then when you buy there, right, the only way is down actually. No market maker can support that, no KOL can support it. Now, what did the crypto industry do? Something so amazing and so innovative, you don't have it in traditional finance, and that's fair launches in meme coins. So think about it, for the first time ever, I mean in principle, fair launch, it's not in reality, in theory, fair launch means that when a project launches the token, it's meme coin in this case, right? All the token supply is in the liquidity pool or it goes to the community and off the project goes, right? So this is such a polar opposite of this, let's list a microscopic amount at high valuation, retail gets run over, but for the first time ever, retail can buy that at that microscopic valuation and see those coins or meme coins going up. So for me, this is an amazing innovation, but a dangerous one, because we're talking about investors and what they do. Their job is to support the project until it becomes sustainable or until it launches the token. And if you ever participated in a fair launch, or if you ever close to it, you realize that once the project does a fair launch, they're out of tokens. How do you fund the project anymore, right? So I really like the innovations in the crypto industry, but also I think all of us probably agree we don't have all the answers, right? We don't have all the answers.
Let me tell you something about fair launch. This is obviously no financial advice, do your own research, and I'm not promoting anything. But as an example, we launched our first collection of Solana clothing brand. We launched it 2 days ago, fair launch. We invite family and friends, and that's it. But then the snipers jump in. And then jump in, but they don't understand it's not a meme. It's a utility token that you need to have to purchase the clothes. But the snipers jump in, and obviously people didn't know. They say, oh, why is my token going down now? So when you have like Pump Fund or Moonshoot, all of that is very good because it gives power to the community, but it's very bad because at the same time, it takes the power from the real actors in the industry. What do you think, Malak?
About KOLs?
No, this is about what is happening with the big institutions. You know, they also do pump and dumps, let's say.
Yeah, I mean, we have seen like with BlackRock and a lot of these institutions, I mean, they're holding a lot of crypto, Ethereum or Bitcoin, but like more on the micro level. I mean, I do see that like with VCs right now, you know, they're doing it very well. They're trying to negotiate some better terms. They don't want to hold the token, you know, more than 4 years, 3 years. So the cliff period has to be, you know, quite like, you know, 1 or 2 years long. Because obviously now there's a lot of stress with LPs trying to, you know, get their return. They want to get an ROI. And so maybe things have changed that the VC cannot really exit when the token goes live. But when I talk with founders, they are thinking that launching a token, going TGE is the ultimate, you know, alternative funding. But I think this is a very dangerous kind of philosophy to think about.
Well, Mr. Key, we're experiencing some turbulence here in the middle of the bloody crypto going down. But what do you think about institution going dumping and pumping?
Well, I think it was happening within the crypto space so far, and right now the big guys are here, the presidents are here, the countries are here, BlackRocks and the giants are here.
The rappers are here.
Yeah?
The rappers.
Yes, exactly. So everybody's here. I think we are at a mercy of whoever has the power and whoever has the influence. They could basically profit from that. And that's a reality. And they could do that in an unregulated space legally. And there's, I mean, at the end of the day, to me, what it sounds like is that we need to be more aware, we need to be more cautious, we need to, as investors or individuals, as retail or whoever whichever hat we are assuming at that point, we need to be cautious from our side, knowing what's happening in the market. There's not a lot you could do about it, and even if you can do something about it, I think it's free markets, and there's not a lot of point in trying to put in a lot of regulations around it personally, but it's all coming back to our own education. But the institutionalization era that we are in, the next 25 to probably 28, the next 3 years, with all this institutionalizing, things will change because these people are coming in, they have more money than anyone else in the crypto has. I think recently today I just learned one of the traditional market maker wants to now start market making Coinbase and all of these places. What can any of the crypto market makers do against someone like that? They have more experience, more people, more money, more connections.
More lawyers.
What?
More lawyers.
Yes, more lawyers. I don't know what any of the members in the crypto space could do other than innovate. Innovate the hell out of it, find some new ways to mitigate it. But if institutions are coming in, they are taking over crypto, it is becoming centralized, old way of the world it always was. And the only way to mitigate is to innovate.
Now, you mentioned about regulators, compliance, lawyers. What do you think is, obviously, compliance are tightening up worldwide, right? And who do you think is more at risk, the influencers or the institutions, now that regulations are tightening up?
I think it is influencers who are at risk at this point, because anything that they said will be held against them in the court right now, right? So institutions are on the safer side because they always know how to play the game of compliance. They have the legal teams, but the members within the crypto space who are not sophisticated to understand that part would be the ones who would have trouble catching up with it right now.
So basically, influencers, they need to lawyer up. Yes,
Yeah.
so the lawyers are winning this space. What do you think, Anton?
Yeah, so I really want to compliment and praise the work of our regulator here in Dubai, VARA. VARA came out with a very, very clear guideline around marketing and specifically around influencer marketing. So if you have not seen this, I really advise you to go to their website. You can download a nice document, and they even give you examples. What is it kind of allowed? What is kind of not allowed, right? And that's how I envision global regulation. Not in a sense that it's harmonized, that it's the same, but in a sense that the local regulators will clearly define what a KOL, an influencer, or even a VC is allowed to publicly say or not. And I think that's fair, right? Because a lot of us, when we read research, when we read posts on Twitter or on X, or Facebook, I don't know, wherever you do it, we always kind of think that the person who writes it is independent. They have done their due diligence. They're being critical when they write it. But the reality is that's not the case usually, right? This is usually paid articles, or maybe somebody has a token allocation, or maybe they invested, so then that's why they're writing about it. And I think the opportunity that we have as a community, as investors, as influencers, to be very transparent with our communities and readers and viewers, I think this is a big opportunity to make UAE even stronger as a hub, and also comply with regulation, actually, right? So we don't have problems with VARA. And VARA has done an amazing work. You also know that VARA penalizes companies when they step over, when they do a little bit too much. And the penalties I have seen has always been on the marketing side, because you promote something that's not true, you're not being honest, or even you say you have a license when you don't really have it. So really, once again, to say amazing work by VARA, also by ADGM as well, right? And that's the way forward, and we can all really be happy and glad that we live in the UAE, because we have an amazing ecosystem here.
Malak?
Yeah, I think we're super lucky that we're in UAE. We have like VARA, like Anton mentioned, the IFC, AGM, and like when you're looking in Europe, for instance, if like an influencer tried to scam you or they shell you a token, you really don't know who to go to because the regulation there is super unclear. We do have MiCA, but still like even like Tether, for instance, it got delisted from crypto exchanges in Europe in December 2024. So at the moment, it's not really clear in Europe. So in UAE, you can really feel safe. And a lot of influencers, like, you know, you have DaVinci here, a lot of other popular influencers, they try to add, like, it's a disclaimer, you can invest in your own risk. So I think that's kind of the glory of it, that if you're starting here in crypto, then you're kind of in a safe spot, while as elsewhere in the US or in EU, things are not very clear. So you don't really have a consumer protection in that sense.
Thank you so much. I have the last question. We have 50 seconds. This is going to be very controversial. Who is your favorite crypto influencer?
I follow a bunch of people, but I make my own conclusions, so I don't have favorites.
Okay. Malak?
I don't know if anyone's gonna hate me, but I'll say Elon Musk.
Elon Musk?
I really like Michael Saylor.
Yes.
I think he's just a very cool guy, you know, and really true believer in crypto, and you know, just a great, interesting guy, interesting product as well. Yeah.
Okay, and mine is CC. He shaped the future for us. Thank you so much, guys. Thank you so much for this panel, and thank you so much to all the audience. And I'll see you in the next panel.